Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of New York and London sugar markets. I'll start with ICE raw sugar in New York. I am again sorry for the multitude of lines I've drawn on this daily chart. I would just like you to know that they are all valid in deciphering what is going on here. The recent declines below the long moving average, currently 1861, can be traced back to three patterns created between August 2021 and January 2022. These patterns are, well, to start with, they are complex versions of normal workaday patterns. They are, and I'm going to do something normally try not to, but I will highlight them with my cursor. So, pattern number one is a complex head and shoulders top from August to November 2021. Neckline currently at 2049. So you have a shoulder here with a double top, the head which is higher, and the third shoulder which is slightly higher as well. That's the neckline running through there, up through there. The second one is a complex triple top from August to November 2021. The neckline is currently at 1953, and that's one, again with the double top, 2 and 3, and you can see that there is a shallower angle to this. It runs through there. The third one, and the most recent, is an awkward head and shoulders top from October 2021 to January 2022. Neckline currently is at 1793, and that's when we take this head, former head is now a shoulder, this is the head, and this is the second shoulder, and it runs through down here. It's the pointing lower. Now patterns 1 and 2 can be somewhat disregarded, as the targets below for both have already been achieved, and it's only the general bearish activity created by these two that we need to consider. Pattern 3, the awkward head and shoulders top, is still ongoing and needs to be considered. 4 weeks ago, the market tried to break below both the neckline and the long moving average, and managing to close with 2 consecutive closes below the neckline. However, the market was held up on a closing basis by the 50% Fibonacci line of the March to November 2021 move at 1768. The recovery lasts as far as the combination of short medium moving average, currently 1886, and especially the medium moving average, currently 1919, which abruptly capped the rise. Since then, prices have again dropped to test the remaining neckline once more. So far, it's held, thus I cannot give a possible target below. However, I can give an idea of the size of the move, should the neckline be properly broken. It would be about 1.1 cents below the broken neckline. Hence, if it was today, then it would be down to the 1680 area, 1680 cents area. There are just 2 other patterns I'd like to highlight. They are both young and nascent, and I would be happy to discard one or both of them if they didn't fit. They are the recent December 2021 to January 2022 bearish Andrews and Schiff pitchforks. Currently, the market is hanging around the middle tine of the bearish Schiff pitchfork. That's currently at 1811. It's looking right now as this bearish Schiff pitchfork may have the ascendancy in which pattern is showing the bearish angle of attack. ICE Europe white sugar. Things are more complicated here than in the New York contract. We do not have as clear head and shoulder top patterns here as we have in New York. There is a possible August to December 2021 head and shoulders pattern. The neckline is currently at 497.5, which was breached 5 weeks ago. But the market's action did not manage to reach down to the rising long moving average, currently 481.80, and indeed seemed to have been rejected by it. Another more serious attempt was started 2 Fridays ago and followed on lower to a certain degree last week. However, by last Friday, prices have pulled back up over the neckline. In truth, I suspect a recently drawn trend line of mine, currently at 488 even, may have been the reason why prices halted their decline. Let me explain. As I said last week, the only pattern that seems to have a chance, and even then it seems to be a slim one, is a possible diamond pattern formed since September 2021 and still in operation. We have the downtrend above, currently at 501.70, ably helped by the paralleling short medium moving average, currently 499.70, and to a certain degree by the further overhead medium moving average, currently at 504.70. Meanwhile, below, we have this trend line I previously mentioned. It is a shallow uptrend of this possible diamond pattern, and that's currently, as I say, at 488 even. I just wish to reiterate that none of these patterns are that good, but they seem to be there. So, what now? Well, we haven't properly broken out of either of these two patterns as yet, but an idea for the downside of the split head and shoulders pattern would be about $24.60 under the break of the neckline. So if that was today, it would be in the 471.10 area, well below the long moving average, and close to the 50% Fibonacci line for the whole of the 2021 period at 471.60. Meanwhile, the possible diamond is a little harder to judge, but I would suggest either a break upwards of $31.30 over the downtrend, or a break lower of about $30.30 below the uptrend. Today there will be something in the 533 even area above, and the 457.70 area below. These last two are not targets as yet, as we have not had a confirmed break on either direction of this possible diamond pattern, though we have tried a few times. Please note the possible diamond pattern reaches an apex effectively in early March. Sugar white premium spread. There are three key patterns in effect here. The first one is looking pretty solid and seemingly a continued bullish influence on the market. The second has been a consistent bearish influence on the market, but has been challenged since the start of this year. Well, the final one has sort of crept up quietly as more of a delayed action explosive device, one that may explode soon, but not just yet. So, the solid support. Well, the solid support is the mid-August to date uptrend, currently at 91 even. This is quite a steep angled uptrend, and one I would normally regard as having a limited lifespan. However, it has been in operation all this time, and during its time has become a 5-pointer uptrend. Thus, this is one to watch closely. The next is the age-old May 2020 to February 2021 bearish shift pitch fork. Now, this has been breached on a number of occasions, both on the top side and on the downside. However, in all that time, we have never had two consecutive closes either above the upper tine, currently at 90 3/4, nor below the lower tine, currently 34 even. That was until last week, when we had the second of two weekly consecutive closes over the upper tine. Additionally, this also affects the finessed May 2020 to date downtrend, with which the upper tine is geometrically linked. Therefore, it will be very, very, very interesting to see how this plays out for this week, next week, and going forward. Finally, a subtle one. Over Christmas, we had a crossover for a bow tie formation consisting of the rising short moving average, currently at 95 3/4, the rising short medium moving average, currently at 85 1/4, and a slowly declining long moving average, currently 76 1/2. What was interesting was how all the moving averages went into the bow tie formation. They all went in the right order, a rare feat in some of the markets. So what should we look for? Well, theoretically, the market should move in the direction of the outgoing moving average, in this case higher, which the market has already done so. However, the key move, theoretically, should happen between 15 to 20 trading sessions after the crossover. In this case, it would be between the weeks of the 4th of April to 9th of May this year. I would suggest putting a note in your respective diaries and calendars for that period, just in case. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final bit.